All right, let's jump into today's deep dive. We're taking a close look at Firstsource Solutions. They're a global player in business process services. And their Q2 FY25 results have been making some noise. We've got all their documents, financial statements, press release, investor presentations. Ready to get into it.
Absolutely. You know, the thing about Firstsource Solutions is that they're not just some standalone company. They're part of the RP Sanjeev Goenka Group. And that's a huge conglomerate, with businesses in all sorts of sectors. I mean, everything from energy and chemicals to media and retail.
Oh, wow, that's quite the portfolio.
Yep.
And Firstsource itself has an equally global reach, right?
Well, yeah, for sure. They've got over 32,000 employees, serving more than 200 clients.
And not just any clients. We're talking big names, Fortune 500, FTSE 100.
Exactly. And here's something really interesting. Firstsource boasts an average tenure of over 20 years with their top 5 clients.
Wow, 20 years. That's impressive.
Right. In the business world, that kind of loyalty speaks volumes about their partnerships. They're clearly doing something right.
Okay, so we've established that they're well-connected, and they've got a solid track record. But let's get down to the numbers. How did they actually perform financially this past quarter?
Well, to put it simply, they exceeded expectations. Firstsource blew past their own revenue growth guidance for Q2 FY25, which is always a good sign, especially in a challenging market like this one.
That's right. It's not exactly smooth sailing out there in the global economy.
No, not at all. But they pulled in a remarkable $19,254 million in revenue. That translates to about US $230 million.
And that's a 25% jump compared to the same quarter last year.
Exactly, a 25% increase year over year.
That's not just growth. That's a real surge. But revenue is just one piece of the puzzle. What about their bottom line, the actual profit?
Well, the news is good there too. Their profit after tax, the PIT, came in at $1,382 million, a very healthy 9.3% increase year over year.
That's solid growth.
It is. And their diluted EPS, the earnings per share, that's also up to 1.96 from 1.80 in the same period last year.
So they're making more money. And their earnings per share are up. Sounds like a win-win for investors.
Definitely a positive sign.
But the question is, what's driving this impressive performance? What's their secret sauce?
Well, I wouldn't say it's a secret. It's more like a smart combination of strategic deal-making and targeted expansion. For example, in this past quarter alone, they secured 3 massive deals.
Okay, I'm all ears. What kind of deals are we talking about here?
So first up, they landed a multi-tower agreement with a major Australian telecom company.
Multi-tower, what does that mean exactly?
It basically means they're providing a whole suite of services, not just one specific thing. It shows they've got the expertise to handle these complex, multifaceted projects.
Sounds impressive.
It is. And then there's the 5-year transformation deal with a top U.S. mortgage provider.
A 5-year deal. Wow.
Yeah, this one's a big one. It signals that they're not just in it for the short term. They're really partnering with their clients for the long haul.
That's a good sign of confidence from their clients.
Absolutely. And the third major win was an expansion of services with a leading U.S. healthcare insurer.
So they're deepening relationships with existing clients as well as bringing in new ones.
Exactly. A good mix of both.
That's a smart strategy.
Yeah.
But wait, I thought there was more to their growth story. Didn't they also make an acquisition?
You're right, they did. They acquired Ascensus, a UK-based customer experience provider.
Interesting. What was the thinking behind that move?
It's all about expanding their capabilities and reach. Ascensus has a strong presence in the retail sector, and they also have what's called nearshore capabilities.
Nearshore capabilities?
Yeah, it basically means they can provide services to clients in Europe, from nearby locations like South Africa, for example.
Ah, I see. So they're getting closer to their European clients.
Yeah.
While also tapping into a more cost-effective workforce.
Exactly. It's a strategic play to gain an advantage.
Very clever.
And it aligns perfectly with their goal of expanding their footprint in the retail sector, which is a booming market for business process services.
Okay, we've got the big picture growth, and we've seen how they're strategically expanding. But let's zoom in on their specific service segments. How did each of those areas perform during the quarter?
Well, the good news is all of Firstsource's key service segments contributed to the company's overall growth. We're talking banking and financial services, healthcare, communication, media, and technology, and what they call diverse industries.
So a good spread across the board.
Yeah, they're not overly reliant on any single area.
That's a good sign of stability. But were there any particular standouts among those segments?
Yes, actually. Banking and financial services showed some real strength this quarter.
Interesting.
This was driven by both an expansion of existing services, and the adoption of some pretty cool AI-powered solutions.
AI, that's a hot topic these days.
It is, and Firstsource is really leaning into it. They've launched a digital collections platform, and they've even developed a language model specifically designed for the U.S. mortgage market.
So they're really betting on AI to streamline their operations and improve the customer experience.
Exactly. They're using technology to drive efficiency and innovation.
It's fascinating to see how AI is transforming businesses like this. But let's zoom back out for a moment and look at Firstsource's overall strategy. What are they doing to ensure this impressive growth continues?
They're definitely not resting on their laurels. Firstsource is actively investing in several key areas to fuel future growth and stay ahead of the curve. For starters, they're simplifying their organizational structure to streamline operations and boost efficiency.
Like a good spring cleaning for their business.
Exactly. A little decluttering never hurts.
What else is on their agenda?
They're also being quite aggressive with cross-selling and upselling to their existing clients. Instead of always chasing new customers, they're making the most of the relationships they already have.
That makes a lot of sense. It's
Yeah.
often easier and more cost-effective to grow with your existing client base.
Exactly. And they're not forgetting about their people either. This is a people-driven business, so attracting and retaining top talent is crucial.
Especially in such a competitive industry.
Absolutely. That's why they're focusing on building a strong employer brand and enhancing the employee experience.
Sounds like they're trying to create a company culture where people actually want to stay and grow.
Precisely. And they're getting recognized for their efforts. They've been certified as a great place to work in India, the Philippines, the UK, and the USA.
That's quite an achievement.
It is. It shows they're genuinely committed to creating a positive and supportive work environment.
But even with those certifications, their reported attrition rate is something to keep an eye on, right?
It is, for sure. It's a key metric in this industry.
Absolutely. Happy employees are productive employees.
No doubt about it.
All right, so we've covered a lot of ground here. Impressive financial performance, strategic deals, global expansion, and a focus on their workforce. It sounds like Firstsource is firing on all cylinders.
They are. And you know what's tying all of this together? Technology, and specifically AI. Their commitment to AI is woven throughout their entire operation. It's a major driving force behind their success.
That's what I was just about to ask you about. We touched on their AI-powered solutions in banking and financial services, but what about their overall AI strategy? What are they doing to really harness the power of this game-changing technology?
Well, they've launched a dedicated AI initiative. It's called Real AI, and it's a whole suite of AI-powered platforms and services.
Re-AI, okay. But what does that actually look like in practice? Can you give me some concrete examples of how they're using this technology?
Of course. For instance, they've developed a large language model specifically for the U.S. mortgage market.
Now, for those of us who aren't AI experts, what exactly is a large language model?
It's a type of AI that can process and understand massive amounts of data, making them incredibly powerful tools for complex tasks. In this case, their mortgage-specific language model is designed to streamline processes and reduce cycle times, making the whole mortgage process faster and more efficient.
So faster mortgages, happier customers, more efficient business.
Exactly, a win-win-win.
What other AI innovations are they working on?
They're also using something called generative AI. That's the type of AI that can actually create new content, like text, images, even code. And they're using it to enhance their digital collections platform.
Now, digital collections doesn't exactly sound like the most exciting area.
Yeah.
What's so innovative about using AI for that?
Well, traditionally, debt collection has been a pretty impersonal and often unpleasant experience. But Firstsource is using generative AI to personalize those interactions and make them more empathetic. It's about using technology to make those tough conversations a little bit easier for everyone involved.
So they're not just replacing human interaction, they're actually trying to improve it.
Exactly. It's a very human-centric approach to AI.
I like that. So we've seen how they're weaving AI into their operations and client solutions. But what about their commitment to sustainability? Is that just a buzzword for them, or are they taking concrete actions?
They're definitely walking the walk when it comes to sustainability. They've gone beyond just talking about it and have taken concrete steps to integrate environmental, social, and governance factors into their business.
Okay, give me an example. What kind of concrete steps are we talking about?
Well, for when they've released their FY24 ESG report.
ESG, that's environmental, social, and governance.
That's right. And this report is a sign of transparency and accountability. They've outlined their sustainability goals and reported on their progress. But they didn't stop there. They also published their first task force on climate-related financial disclosures report.
That's the TCFD report.
Yes, exactly. This shows they're serious about managing climate-related risks and opportunities.
So they're not just saying they care about sustainability, they're actually measuring their impact and reporting on it.
Right, they're putting in the work.
That's a good sign. All right, we've covered a lot of ground here in part one of our deep dive. We've seen FirstSource's stellar financial performance, their strategic acquisitions and partnerships, their employee-centric approach, their commitment to AI, and their dedication to sustainability.
It's an impressive picture.
It really is. But there's still much more to explore. In part two, we'll delve deeper into some of the specifics we've touched on today. Stay tuned. Welcome back to our deep dive into FirstSource Solutions. In part one, we got a taste of their impressive performance, and we saw how they're strategically positioning themselves for continued growth. But now it's time to roll up our sleeves and dig a little deeper into some of those specifics.
Absolutely. Let's get into it.
So we touched on their financial performance earlier, but let's take a closer look at their numbers for the 6 months leading up to September 30th, 2024. Breaking down their revenue by service segment can give us a better understanding of where their strengths lie.
Yeah, that's a good place to start.
So which segments brought in the big bucks?
Well, healthcare was a major contributor. They pulled in a substantial hero, $13,397.69 million, showing their strong presence in this growing market.
That's a healthy chunk of change.
It is, and right behind healthcare was banking and financial services, generating $13,126.95 million.
Okay, so those are the heavy hitters. What about their other segments?
Communications, media, and technology came in at $8,092.41 million. And diverse industries rounded things out with $2,547.77 million.
So even though those segments brought in less revenue, they still play a vital role in diversifying their portfolio.
Exactly. It's all about balance.
But revenue is just one side of the coin, right? What about their profitability in each segment? Are they making good margins across the board?
That's a great question, and the answer is yes. Looking at their segment results before taxes and financing costs paints a very positive picture.
Okay, let's hear it.
So banking and financial services clocked in with a profit of $1,975.06 million.
Wow, that's impressive.
It is, and healthcare followed closely with $1,597.38 million.
So those two segments are not just bringing in the most revenue, they're also the most profitable.
Right, they're really performing well.
What about the other two?
Well, communications, media, and technology achieved a solid euro 1,427.34 million in profit, and diverse industries contributed 389.81 million.
Those are some healthy margins.
Absolutely. These numbers show that FirstSource is operating efficiently and effectively.
Across all their segments.
Yeah, it's a good sign.
Now, remember how we talked about their focus on cross-selling and upselling to existing clients?
Yeah, I remember.
Do their financial reports give us any insight into how that strategy is playing out?
Well, while the reports don't give us specific figures on the direct impact of cross-selling and upselling, we can definitely see evidence of their success in the way they're expanding existing relationships.
Okay, I'm following you.
Remember that multi-tower deal with the Australian telecom company we discussed earlier?
Yeah, the one that was a brand new client win.
Right, but they've also secured expanded services with that U.S. healthcare insurer and a significant transformation deal with the U.S. mortgage company, both existing clients.
So they're not just chasing new clients, they're also nurturing the relationships they already have.
Exactly. And that's a smart way to grow.
Speaking of relationships, let's talk about their employees. Attracting and retaining talent is a major challenge in this industry. What can you tell me about their employee metrics?
Well, we touched on their attrition rate earlier, which currently stands at 30.9% over the trailing 12 months.
That's right, we did.
Now, that might sound high, but it's actually a significant improvement from the 39.8% they reported just a year ago in Q2 of FY24.
Wow, that's a pretty big drop.
It is.
It sounds like their efforts to improve the employee experience are starting to pay off. But what exactly are they doing to make FirstSource a more attractive place to work?
Unfortunately, the materials don't delve into the specifics of their initiatives.
Oh, that's a shame.
Yeah, but their emphasis on building a strong employer brand and their repeated mentions of enhancing the employee experience suggest a genuine commitment to creating a positive and supportive workplace.
And let's not forget those Great Place to Work certifications they've received in multiple countries.
Yeah, those are a good indication.
It shows they're walking the talk.
Absolutely.
Now, we know FirstSource operates globally, but I'm curious about their geographic footprint. Where do they generate most of their revenue?
Their investor presentation breaks down their revenue by geography, which gives us a clear picture of their key markets.
Okay, what does it say?
For Q2 FY25, a whopping 68.5% of their revenue came from North America.
Wow, that's a huge chunk.
It is. It highlights the importance of the North American market for their success.
So North America is their bread and butter.
You could say that.
What about the rest of the world?
Well, Europe, the Middle East, and Africa, or EMEA, accounted for 31.4%.
Okay, that's a decent portion.
It is, and the rest of the world contributed a small 0.1%.
Not much coming from other regions then.
Not yet, but remember that Australian telecom deal.
The one we discussed earlier.
Yeah, that's a clear indication that they're strategically expanding their reach into new territories.
Right, they're not just sitting still. Now, let's go back to their acquisition of Ascensus for a moment. We know it strengthens their nearshore capabilities and expands their presence in the retail sector. But what specifically does Ascensos bring to the table? What makes them such a valuable asset?
Well, Ascensus is a real powerhouse in the customer experience outsourcing space, especially in the retail and e-commerce industries.
So they're a good fit for Firstsource?
Definitely. They're headquartered in the UK, but also have operations in South Africa.
Ah, so that's where the nearshore aspect comes in.
Exactly. They're strategically located to serve European clients cost-effectively.
It's like they're getting the best of both worlds.
That's a great way to put it. And their multilingual capabilities are a major asset, too. They can communicate with customers in a wide range of languages, which is essential in today's globalized market.
It sounds like this acquisition was a really smart move for Firstsource.
I think so. They're not just expanding their geographic reach, they're also bolstering their expertise in a high-growth sector.
Okay, so we've seen how they're growing their revenue, expanding their global reach, and nurturing their talent pool. But every business has its challenges, right? Are there any potential red flags we should be aware of? Anything that could potentially impact their future success?
Well, one thing that caught my eye in their investor presentation was the significant increase in their long-term debt, including current maturities.
That sounds a little concerning.
It's definitely something to keep an eye on. As of September 30, 2024, their long-term debt stood at $3,885 million, a substantial jump from $6,526 million as of March 31, 2024.
That's a big increase.
It is.
What's driving that debt?
It's likely due, at least in part, to their recent acquisition of Ascensos. Acquisitions often involve taking on debt to finance the purchase.
Right, it makes sense.
So it's not necessarily a bad thing in itself, but it's something to watch.
It's a bit of a balancing act.
Yeah, but here's the good news. Their investor presentation also highlights their strong operating cash flow and free cash flow.
Okay, so that's a positive sign.
It is. It indicates that they're generating enough cash to comfortably service their debt.
So they're not drowning in debt.
No, they seem to be managing it well.
Now, before we move on to part 3 of our deep dive, I want to circle back to their AI initiative, Re-AI. We've seen some examples of how they're using AI, but I'm curious about the actual impact these investments are having on their business. Are they seeing tangible results?
Well, while the materials don't provide specific financial figures directly tied to Real AI, they do offer some pretty compelling anecdotal evidence.
Okay, like what?
For instance, they mentioned that their AI-powered agent training program, AI Coach, has reduced the time it takes for new agents to become proficient by 25%.
Wow, 25%, that's a significant improvement.
It is. It means faster onboarding and improved productivity.
That's a game changer.
Yeah, it really is. And they're not just using AI to train their employees. They're fully embracing it internally. They actually state that 100% of their internal technology team is AI-enabled.
Wow. 100%. They're really all in on AI.
They are.
It's clear that they're committed to integrating AI into every aspect of their operations.
Right. And remember those examples we discussed earlier?
The mortgage-specific language model and the generative AI-powered digital collections platform.
Exactly. Those are real-world applications of Real AI in action.
It's not just theory. They're actually putting it to work.
Right. And it highlights how Firstsource is leveraging AI, not just to cut costs, but also to improve customer experience.
Yeah.
And differentiate themselves in the market.
So it's about working smarter, not just harder.
Absolutely.
Now, with all this focus on AI, are they neglecting other crucial aspects of their business? Are they putting all their eggs in the AI basket, so to speak?
Not at all. Remember those strategic priorities they outlined?
Refresh my memory.
Simplifying their organization, amplifying their brand, elevating the employee experience, expanding capabilities, and improving margins.
Right, those were the key areas.
AI is definitely a key enabler for many of these initiatives, but it's not their sole focus. They're taking a holistic approach to business growth.
That's a relief to hear.
They're not putting all their eggs in one basket. They're diversifying their efforts and investing in a range of initiatives that will drive long-term sustainable growth.
It's like having a balanced diet.
Exactly. You need all the food groups.
And Firstsource seems to be taking a similar approach with their business strategy.
Right, and this brings us to a really interesting observation. The way they're managing to balance a focus on cutting-edge technology like AI with a deep understanding of the human element in their business.
I see.
Their focus on employee experience, diversity, and ethical AI development shows a nuanced approach that recognizes both the potential and the pitfalls of this technology.
It's like they're embracing the future while staying true to their values.
Exactly, and that's what makes their story so compelling.
Well, we've certainly covered a lot of ground in this part of our deep dive. We've explored their financial performance, delved into their employee metrics, and seen how they're leveraging AI and acquisitions to drive growth. But the story doesn't end there. In Part 3, we'll step back and consider Firstsource's overall outlook. What does the future hold for this ambitious company? What should you be watching for in the coming quarters? Stay tuned to find out. All right, welcome back for the final part of our deep dive. We spent the last two parts getting to know Firstsource Solutions, their financials, their strategies, their approach to tech, and their people. But now, let's look ahead. What does all this mean for their future?
Well, that's the big question, isn't it? Trying to predict the future, but we can look at the information we have and make some educated guesses. And one thing that really jumps out at me is their revenue growth target. They're aiming for 19.5, 20.5% growth in FY25.
That's ambitious.
Yeah, it's a bold goal, especially considering the current global economic climate.
That's right. Things are a bit uncertain out there. Can they really hit those numbers if the economy takes a downturn?
Well, that's a risk for sure, and it's something investors will definitely be watching closely. But remember, Firstsource has some advantages here. For one, they've got a diversified portfolio across multiple industries.
Right, we talked about that. They're not overly reliant on any one sector.
Exactly, so even if one area slows down, others can help pick up the slack.
Like a good safety net.
Yeah, exactly. And their push into new markets is another smart move.
Right, expanding their global footprint.
Exactly, spreading the risk, opening up new avenues for growth.
It's like they're setting up multiple bases of operation.
I like that analogy.
So diversification and global expansion, those are two key factors. But let's talk about AI. How big of a role do you think their AI initiatives will play in their future success?
Oh, I think it's going to be huge. Their Real AI initiative is really about transforming their entire business.
Not just automating a few tasks here and there.
Right. It's about using AI to streamline processes, enhance customer experiences, develop innovative solutions, create a competitive edge.
So it's about staying ahead of the curve.
Absolutely. And remember, they're not just using AI internally, they're also developing AI-powered solutions for their clients.
Right. They're becoming a go-to partner for businesses looking to embrace AI.
Exactly. And that gives them a real advantage in the market.
Okay, so revenue growth and AI adoption are two big things to watch. What else should we be paying attention to?
Well, profitability, of course. They're aiming for a normalized EBIT margin, that's earnings before interest and taxes, in the 11.5% range for FY25.
So can they keep those profit margins healthy while they're investing in growth?
That's the challenge.
And didn't we see some margin contraction in recent quarters?
We did. Their Q2 FY25 EBIT margin came in a bit lower than their target at 10.8%.
So is that a cause for concern?
Well, they attributed it partly to one-time charges related to the acquisitions.
Right, the Ascensus deal.
Exactly. So it'll be interesting to see if they can bring those margins back up in line with their goals.
So a little bump in the road, but not necessarily a sign of trouble ahead.
Right.
And speaking of the Ascensus deal, we talked about their increased debt from that acquisition. Is that something to worry about?
It's something to keep an eye on, yes. But remember, they have strong operating cash flow and free cash flow, which means they're generating enough cash to handle those debt obligations.
That's good to hear. And their investor presentation talks a lot about their commitment to shareholder value. They've delivered an impressive total shareholder return of 592% over the past 5 years. Can they keep that momentum going?
That's a tough question. Past performance doesn't guarantee future results. But their strategic initiatives, their focus on growth, their embrace of AI, it all suggests they're on the right track.
Okay, so it sounds like they've got a lot going for them.
Hmm.
But let's be realistic. Every business faces challenges.
Yeah.
What are some potential roadblocks that FirstSource might encounter?
Well, one of the biggest challenges is the competition. The business process services sector is highly competitive.
Right, they're not the only player in the game.
Not at all. They're up against some big global giants constantly battling for clients and market share.
So they need to stay sharp.
Absolutely. And then there's the ongoing challenge of attracting and retaining talent.
Right, the war for talent.
Exactly. Even with their efforts to improve the employee experience, that 30.9% attrition rate is a reminder that it's tough out there.
It's a constant battle.
And we can't forget about the rapid pace of technological change. AI is a powerful force, but it's constantly evolving.
So they need to stay ahead of the curve.
Exactly. They can't afford to fall behind.
And of course, there's the unpredictable nature of the global economy. A sudden shock or a prolonged downturn could impact any business.
Very true.
So it sounds like FirstSource is at a crossroads. They have strong momentum, ambitious plans, a commitment to innovation. But they also face some significant challenges.
It's a balancing act.
So what's your overall assessment? Are you optimistic about their future?
I'd say I'm cautiously optimistic. They've shown they can execute their strategy. They're embracing disruption. They're not afraid to take risks. It'll be interesting to see how it all plays out.
So if you had to sum up FirstSource Solutions in just one sentence, what would it be?
I'd say Firstsource Solutions is a company that's leveraging its strengths, embracing disruption, and strategically positioning itself to be a leader in the future of business process services.
Well said. And on that note, we'll wrap up our deep dive into FirstSource Solutions. We've covered a lot of ground today. Their financials, their strategies, their technology, their people. But remember, this is just a snapshot in time.
Right, their story's still being written.
Exactly. Thanks for joining us on this deep dive. Until next time, keep exploring, keep learning, and keep diving deep.